How you doing, Ed?
Alex, always great to see you.
Always great. Pink glasses?
Pink glasses, not necessarily meaning sell, as in red. It could be green glasses, right? So we're going to look at the S&P. That's one of the first things I look at in the morning, just to get an idea. Are we looking positive? Are we looking negative? Gives you a good indication. 500 companies in the S&P. I've got some trading buddies. They say that's the index to look at. Look at the S&P.
So I know last week, I think it hit an all-time high.
It closed at an all-time high Friday, I believe.
Right, and it's been gaining ever since 2019.
You know what? I got the 1-year chart up, and we've got it up here, and I can draw some lines. So we had this. This is going into October. Then all of a sudden, you know, they're talking about raising rates, and you know the economy can withstand it. And all of a sudden, look at this. Serious correction. And again, I'm not saying why or anything. I'm just saying this is what happened, right? If you're bullish as hell here, you got your ass handed to you. If you're bearish as here, you left a lot of money on the table because look, right back. So, and I think this is a great time to be watching this because basically we went down 20%, up 20% in about 5-6 months.
So can I ask you, are you looking at fundamental reasons why the S&P would be falling off? Or are you looking at those all technical indications to get back in?
They say the price of the instrument has got all the information that's available in the world baked in it.
Right.
So they don't need me to try and analyze it. I'm not going to sit here and look at every tree in the forest. I want to look at the forest and say, yeah, looks like that's a pretty healthy forest. There's no leaves on the trees. There's something wrong with the forest.
Yeah. To estimate a company's value takes in so many different variables. It's almost impossible to equate the true fundamental value of a company. Whereas you can use technical analysis to make money in the market.
A lot of great people will tell you everything that's known about that company is baked in the price at that moment. All the whims, the desires, the passions, the you know, I should have done this, I should have done that, regrets, laments, all this stuff is in that price right now.
Right. Okay, so looking at the S&P 500 chart, what do you see as some key indications or levels that you would jump in?
Well, right now, I'd be very careful because we're just above or right around those highs of last October when the shit hit the fan, okay? So right now, after that big move, I'm not being really aggressive here. I like to look at specific things and say if they're overbought, oversold. Right now, I suspect a lot of things are overbought. Yeah, but that doesn't mean we can't go right through this, right? And just keep going.
Can I ask you what breaking through an all-time high signifies?
Usually it's a serious breakout. Usually it means a lot higher.
Okay.
And when everybody's going high, it can't go higher. That's usually when it does. It's when everybody's in agreement that it's going higher, that's when it doesn't. That's how it usually works because some of the reasoning, if everybody's saying it's going higher, then they're probably all in. Well, then they're already all in. Who else is left to come in to push it higher?
Right. So we're looking at a 1-year chart here.
This is a 1-year chart. I'm going to just clear up these lines.
So are you using this 1 year to make short-term decisions, or do you zoom in to a narrower time frame to make those shorter-term decisions? Well,
you know what? I'm not trading the S&P. Okay, I look at the S&P to give me an idea of how the world's looking.
Okay.
But I did a trade today in a company. Because it dropped dramatically in a very short period of time. We can put that chart up if you want.
Okay.
All right.
So what company are you talking about?
The ticker is BAMM, Body and Mind.
Body and Mind.
Okay. There's a 3-month chart. So this is 3-month chart.
It had a good run.
Good run.
Great run.
Months. Look at this. This is an exponential move. Just a minute here.
On volume.
Big volume. Not that many shares outstanding. Look at that. When it starts to accelerate to the upside, usually exponential move, we're getting to the end. Okay, usually. Now it doesn't mean it can't go up a few more days. So in this case, it went up, and I was actually, you know, like I've been known to play things from both sides of the fence, whatever that means. And look, this thing was up to 370. 1, 2, 3. Today's Tuesday. It was halted yesterday, so Friday, Thursday, Wednesday. Last Wednesday at 370 and sold off. So we had that's not a good candle. That candle in the center there, it's all wick.
A big wick, as they say.
Look at this. So 370, and today traded as low as 155. 155. You bought this thing at 3.25. You're shaking. You're talking. You're calling up your mother. You're doing whatever you have to do. You're in a state of shock. They announced the funding today at $1.25. They're going to raise $10 million. Anyway, I went long. The funding was at $1.25. I bought it right in the open. Paid it, I think, an average of 162. Within minutes, I was out at 192. It hit 2 and change. A successful trade.
So what were your reasons for jumping in? Was it based on the fundamental news coming out?
No. But I will say this: a company gets funded, it's a stronger company. If this company, and it should have no problem raising money at $1.25 if it's trading at 2.
Right.
And the last time I looked, it was trading at 2. So that money goes into the company, okay? Private placement. They have to hold the stock for 4 months. There's no more new shares that are going to clog up the buying and selling, right? But when I look at this drop, I say to myself, if you look at if you look at all the charts in the world, I defy you to show me one that just goes one way.
Right.
Maybe the chart of time, right? But other than that, I don't know of anything that goes one way. Temperature on our planet doesn't go one way, and if it did, we'd all be frozen or toasted a long time ago. So the stock drops from 370 down to $1.55. It may go a little lower, but I'd be buying more.
Did it gap down?
It gapped down significantly. It closed at 220 Friday. It opened today at $1.55. And I said if it got to 180, I'd buy it.
Do you follow the philosophy that gaps are always filled?
They're filled a lot. They're filled a lot. Yeah. They're not always filled, but then you're getting into some advanced technical.
Were there any other indicators that you looked at on that chart other than the price drop?
Well, I know how many shares there were. Okay, so that's a fundamental thing. There's about 45, 50. So there's not a lot of stock, and the market, the total value of the company isn't like $2 billion. It's 100 million or something like that, or 150 million. That's not crazy in this space. A lot of things we've looked at that get to 300, 400, 500 million. If this was a mining deal, this couldn't happen if it was a mining deal right now. Mining deals are stuck in muck. Okay?
Okay, so what else do we want to look at?
Well, you know what? Let's take a look at gold.
Okay.
Okay, because Canada is a natural resource country. For years, we're the sort of the mining center of the world. So look. So there's a 5-year chart of gold.
Up and down.
Up and down, but it doesn't really do justice. But let's take a look at a 10-year chart. There, this is better. Okay, so this is, by the way, the big ETF in the U.S., which tracks gold almost perfectly.
Right.
The price isn't relevant. So this was when we. Sorry. This is when after the crisis. We had an exponential move, gold peaked, double topped, not as high, and then we went down to here. But look, you could argue.
Within that range.
We're in that range. Yep. We're in that range. Now, if you show that range over 1 or 2 or 3 years, it looks like there's these big moves, but we're range bound right now. So you know what? As far as I'm concerned, the trend is your friend. We're range bound. So that's, I thought we'd take off. I thought we'd put in a sort of a symmetrical base. Got to be careful we don't draw anything that looks too lewd, too technical base. So look at until gold makes a significant move above here, and it's not a number. It's going to be, maybe it's going to be over there a month. So it starts trading up in here like this. then I would say all bets are off. Then you got to start looking at this, okay?
So why are you looking at this chart every single day?
Because I believe eventually gold, because you can print money, you can't print gold. Gold is your sort of, you can't, gold can't be produced by the whims of elitists that sit in ivory towers. Gold is made on the sweat on the backs of men.
And there's a finite amount of it.
There's a finite amount of it,
right?
And it's been around for 5,000 years. You know what pissed the people in Rome off? Is when they took the gold coins, the printer, the people that made them, and they started putting alloys in the coins.
Right.
And people would get the coins and say, "You bastard! Now I got now what is this thing? It doesn't have any gold in it. It's got something else." We saw it. I found a quarter in my I had a little change purse in my car, and it was a silver coin. It was an actual silver coin. They can't make silver coins out of.
Well, they can't even make copper coins anymore. It's too expensive to make copper coins.
A penny's probably worth a nickel.
Yep.
Should have saved all your pennies. You'd have made a lot more money. But don't stick it in the bank. Just keep the coins. People that's collected bags of coins throughout made a lot of money.
I have a $2 bill at home.
There you go.
I don't know where those ever went.
Well, paper. Fiat. You heard the expression, obviously. Yep. Fiat money, right? It's like the wind. So yeah, I watch gold because I think, and there's some smart guys in town. Eric Sprott, Rob McEwen. There's a group of them. They believe gold is going to come back big.
So let's just say you see gold rising, appreciating.
I would look at. I'll tell you what I'd look at. I'm going to put it up here. I'd look at
either breaking the trend to the upside or the downside.
I want to see how the venture exchange is reacting to a breakout move in gold. Right now, with gold going sideways, the venture is, a little bit of this, a little bit of that.
So if gold broke to the upside, are you looking to see a venture move to the downside? Would you take money off the table in the equity market?
If I had any money, I would take it off. Yeah, you know what? Like I bought a lot of Crown Mining a year and a half ago, and it wasn't a good move. I mean, now that I see all the action here, there, everywhere.
That decision was based on fundamentals?
Yeah, that decision was based on eventually copper is going to catch a bid.
Right.
Because we're going more and more electric,
so
right?
it's a change in your philosophy.
But the chart, all you got to do is watch the price. But copper did start to move a bit. It's now around $3, but it's a bit of a turtle. I'm a bit of a rabbit. In my own mind. So you want to look at?
Let's look at Alphabet.
Okay, so the ticker is GOOG, right?
GOOG. They obviously came out with their earnings report yesterday. I believe.
Okay, 1181 down. Wow, down $100.
Right.
Whoa.
So I believe their revenue was a mere $29.5 billion, Ed. I'll let you wrap your head around that, which is 500 million short of their expectations.
Yeah. A billion is such a big number.
Yeah.
Forget about 100 billion. Forget about the fact that, I think Amazon, Microsoft, and Apple are now trading at values of over $900 billion. Mind-boggling.
Unfathomable.
A billion is 1,000 million. Anyway, so let's take a look at Google. Let's see what's the chart telling us here.
So clearly they've been hit hard since the news.
So
but from a technical side,
okay.
What are you looking at?
Well, I'll tell you. I'm going to put up so we get a 2-year chart, and we got major volatility. The one thing I want to talk about here briefly is that Amazon had some bad results a while back. The stock dropped sharply and then came back almost with the market. Apple, same kind of thing. This one sort of hasn't had that, and yet today it has. The world seems to be slowing down. There is an central bank out there that's talking about raising rates right now, right? And again, I don't look to me for fundamental stuff, but charts.
But again, to price a company like Google on fundamentals, the amount of things that Google get into, it's very hard to equate
exactly
the true actual value of the
So
company.
we're down to about $100, and I'm going to put up a 1-year chart here. Okay, so let's just, but you know what, you might argue here. You know what, look at this. This is back 1 year. Okay, so look at this move. And all the way back, right? Very, very, very similar to the S&P.
So how are you playing this though? On a short term?
On a short-term basis, there's a big gap now. There's there's where we are. There's where we were yesterday.
So are you looking at a price level to enter back in?
You know, I really don't focus on these things because I don't know, you know, with my limited amount of capital, how many shares can I buy? 10 shares? It's, when you think about it, it's $10,000 to buy, or it's $12,000 to buy 10 shares.
Yep.
It's a lot of money. Well, how would I play? You know what? I'm a little leery of the markets, and I think a lot of the reason the markets are doing so well is because the Fed isn't raising rates, and they're buying stocks. They're sort of the bid in the market to make everything look good. You know, what's the expression? Look, the emperor is not wearing any clothes, right? So what would I do with this? I'd probably, it's maybe a sign that some things are breaking down. It's tough to say. With the valuations, there's so many different things to look at.
Yeah, I think Netflix came out with decent financials. I believe Facebook even had positive earnings.
Yeah.
Apple is still to come. So lots of big news.
Yeah, lots of big news. Well, let's as we do this, we're going to do this on a regular basis. We'll talk about these things.
Yeah, hopefully we'll come back next week and do an overview.
Yeah.
For what's to come.
Perfect.
Thanks, Ed. Learned a lot.
Yeah, thank you. Enjoyed it.